When the market goes up, you go up. When the market goes down, you don't go down. Safe Money Radio, your money safe and sound.
Welcome to Safe Money Radio with your host, Brad Pistole. Brad is a no-market risk retirement and income specialist, primarily serving Springfield, but he's sought after nationally for his expertise in helping people secure their retirements. Mr. Pistole is licensed in the states of Missouri, Arkansas, and Kansas, and he specializes in working with people who are near retirement or those who have already retired with wealth management, income planning, and asset protection strategies.
Safe Money Radio, your money safe and sound.
And now, here to talk with you about no market risk retirement planning, your host, Brad Pistole.
Welcome to Safe Money Radio. I am Brad Pistole, a certified financial fiduciary and the president and CEO of Trinity Insurance and Financial Services, an asset and retirement protection company right here in Ozark, Missouri. Well, hello everyone. As we get started today, I want you to take a long, deep breath. Because you see, as I record this show and this podcast in early 2023, it helps me realize we all survived 2020 and 2021 and all the COVID worldwide pandemic nightmare. At least we think we have for now. But yet, if you retired at the end of 2021, it's possible that a whole new nightmare might have started for you. What's that? Well, you see, if you kept your retirement money invested in accounts that are directly tied to the stock market, and if you started 2022 by taking distributions from a retirement account that wasn't protected from market losses and that doesn't provide contractually guaranteed lifetime income, you probably had a pretty painful 2022, and you might be second-guessing yourself and your plan right now. So let's take a quick look at what 2022 brought the world of investors. Here are the numbers, and you know what they say, the numbers don't lie. In 2022, the Dow, the S&P 500, and the NASDAQ had their worst annual performances since the financial meltdown of 2008. The Dow finished the year down 8.8%. The S&P 500 finished the year down 19.4%, and the NASDAQ finished the year with a whopping 33.1% loss. In fact, it was the seventh worst year for the S&P 500 in the history of the stock market. But that isn't the end of the story, and in fact, it's just the beginning. The financial mess of 2022 didn't just affect the United States. It affected the worldwide economy. In 2022, Europe had its worst year since 2018. The European index, known as the Euro Stoxx 600, finished the year down minus 12.9%. And stocks in China and Japan snapped their 3-year win streak in 2022. And for those of you who were hoping cryptocurrency and Bitcoin was going to save your bacon, think again. Bitcoin hit an all-time high in November of 2021 with a value of $68,789, but finished 2022 with an epic crash, down 64% from the all-time high just the year before. And finally, how about all the average stockbroker's safety vehicle? Bonds. Aren't bonds supposed to have an inverse relationship with stocks? Don't bonds always go up when the markets tank? Well, you better think again. While stocks had a miserable year in 2022, bonds fared even worse. Inflation, massive interest rate hikes, and a super strong dollar left bonds in a completely vulnerable position, and they were exposed in 2022. The return on the S&P U.S. Treasury Bond Index was minus 10.7% in 2022. The 30-year U.S. Treasury bond at its low sunk to its worst return in a century at minus 35%. And corporate bonds had a miserable 2022. The return on bonds issued by the S&P 500 companies was minus 14.2% in 2022. So with all these facts behind us, and with 2022 now officially in the books, let me ask you, where does this leave you with your current financial plan? Did your plans for the future get exposed in 2022? Did you find out just how good or possibly how terrible your financial advisor's advice was? If you were invested in the markets in 2022 and you find yourself with 20+% losses all across the board, is your advisor giving you the same old advice? You know, the advice that he gives everyone when there's a down year? Just stay the course. Markets always come back. How does that feel right about now if you experience 20% losses while taking distributions, while paying that advisor a 1 to 3% fee, even though their advice lost you thousands and thousands, if not tens of thousands of dollars? Friends, I've been hosting Safe Money Radio for 14 years now. This is the longest-running financial planning show in the Ozarks, and we have dedicated listeners to our radio and podcast program all across the United States. I'm a certified financial fiduciary and a retirement income certified professional through the American College of Financial Services. And do you want to know what 100% of my clients have in common? Absolutely none of them lost one single penny from their retirement accounts in 2022. In fact, not one single client of mine has ever lost one single penny from their accounts because of stock market fluctuation dating all the way back to the financial crisis of 2008. Why is this? And how is this possible? Because we use accounts that are insured and contractually guaranteed to protect 100% of your principal. We also use accounts that contractually guarantee you lifetime income that you can never outlive. Now, do you think our clients are happy right now when everyone else is losing money? We have helped clients all across this country protect more than $200 million in retirement assets, and we can show you how to do the exact same thing. So just call us anytime at 866-780-SAFE. That's 866-780-7233. When you call, ask for a free financial consultation, which will take place with me personally. You see, I don't charge fees to meet with clients, ever. When we meet, I will give you a copy of my Amazon best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan. And remember, America's IRA expert and CPA from New York, Ed Slott, wrote the foreword for this book. You will listen to him talk about why he asked me to write the foreword for this book. Now, if you don't want to call into the show, if you're just too shy, listen, you can go on to Amazon right now and purchase an audio version of Bulletproof for $5.99. Friends, I didn't price this book to make money. I priced it to make sure absolutely everyone could get this life-changing information as quickly and as easily as possible. Now think about that. You can listen to Bulletproof and to the information that has changed the lives of people all across the country for less than the price of a breakfast combo at a drive-thru. And once you read or listen to the book, you will find out exactly why your current advisor doesn't want you to know about the things that I share in this book. So call us anytime at 866-780-7233. If you lost money during the market crash of 2022, and if you want to keep your money safe, you need to read this book. Our number again is 866-780-7233, and there's someone standing by right now to take your call. Well, I have to take a short break. This is Brad Pistole, and you're listening to Safe Money Radio. Let's pause for some exciting announcements.
How low can interest rates go? CDs, money market accounts, and checking or savings accounts seem to be the way banks give us the short end of the stick these days. If you have your money in a bank, you might even be losing money because of inflation. Don't let low interest rates get you down. How would you like tax-deferred growth of up to 3% on a short-term account? Have you ever heard of triple compounding? You can get interest on principal, and interest on taxes you would normally have to pay if your money was in a bank account. Don't let the bank give you 1% while taking your money to issue credit cards with 18% interest rates. Call now for rates of up to 3% or more, tax deferred, on your short-term safe money. Call 1-866-780-SAFE. That's 866 780-7233. You're listening to Safe Money Radio with your host, Brad Pistole.
We've been talking about safe money programs and how you can earn market-like returns without any of the market risks, how you can eliminate the fees that you're now being charged by your broker, and how you can start feeling secure, knowing that your retirement money is safe and growing.
Now, before the break, we were talking about 2022 and how it rocked investors all over the world, especially those who are near or planning for their retirement. So just think about this for a minute today. If you want a formula for financial disaster, I talk about it in my best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan. I call this formula the triple whammy. The triple whammy is when you start taking distributions from an account while experiencing losses in that account while paying your advisor fees on that account. I use specific examples in my book to show you how that will bankrupt your retirement plan so fast it will make your head spin. And guess what? There are approximately 10,000 people a day who are retiring right now, every single day. And many of them keep their 401ks and their IRAs invested in volatile things like the stock market. Now guess what? Guess what the most important, popular day is for people to retire? If you're guessing December the 31st, you guessed correctly. So think about this for a minute. If you retired back on December 31st of 2021, when the markets were riding all-time highs, and then you pulled the trigger on your retirement while leaving your money invested in the stock market, how did the first year of retirement pan out for you? Well, I can tell you this, it wasn't good. In fact, depending on how aggressively you were invested and how much you took in distributions and how much you're paying in fees to your advisor, your retirement income plan might be in serious trouble after just 1 year. Friends, worldwide economist Tom Hegna is one of the most respected authorities on retirement income planning in the world, and he doesn't beat around the bush when it comes to risk and retirement. I've had Tom on the show many times throughout the years, and today I want you to just listen to what Tom has to say about risk and retirement.
You know, when people ask me, when is the riskiest time to invest? Many people in their minds think it's when they're 87. And they're kind of shocked when I say, well, it's when you're 57 to 67. They go, what do you mean? You know, because I was always taught that the older you are, the more conservative you should invest. I was taught that 80-year-olds should invest their money more conservative than 60-year-olds, and 60-year-olds should invest their money more conservative than 40-year-olds. That's what I was taught. I'm sure most of you were taught that too. That's not what the research shows. The research shows that the riskiest time to invest is right before or right after retirement. Because if you lose money in that box, it can devastate your whole retirement. People who lose money early in retirement can have their retirement absolutely devastated. People who lose money in their 80s and 90s has much less of an impact on their retirement than people who lose money early in retirement. And that's why baby boomers need to put some guarantees in their portfolio. I'm not against the stock market at all, but I'm against having a huge amount of your money in the stock market, especially when you're in your 50s, 60s, 70s. That is not the place to have the majority of your money. You can certainly have money in the market, but you shouldn't have the majority of your money in the market, or you're going to be very disappointed at some point in your retirement. I can promise you that.
Now, friends, did you hear what Tom said? The riskiest time to invest isn't age 80 or 90. The riskiest time to invest is age 57 to 67. Or in other words, the riskiest time to invest in the market is right before or right after you retire. Well, now, why is that? Well, Tom beautifully explains why. You see, because if you lose money just before or just after you retire, it can devastate your retirement. This is known as something we call the sequence of returns risk, and I'm going to have Tom talk about this more in our next segment, how it works and how it affects your retirement. But trust me on this, as a retirement income certified professional, understanding sequence of returns risk and how it affects your retirement income plan is critically important if you want to avoid running out of money in retirement. So stay with us today. Friends, I've been hosting Safe Money Radio for 14 years now. This is the longest running financial planning show in the Ozarks, and the show is podcast on YouTube, Apple Podcasts, and Spotify. Just look up Safe Money Radio with Brad Pistole. If you're listening today and you want to learn how to protect your retirement from market crashes like 2001, 2008, 2020, and 2022, just call us at 866-780-SAFE. That's 866-780-7233. I will give you a copy of Tom Hegna's best-selling book, Don't Worry, Retire Happy, absolutely free. Just request a free financial consultation with me. When we meet, I'll give you a free review of your current plan, and I'll tell you whether or not you are in a position to withstand market crashes like 2022. Remember, I'm a certified financial fiduciary and a retirement income professional through the American College. I wrote my best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan, with the very purpose of teaching you how to avoid financial disasters like what happened in 2022. You see, my clients didn't lose one single penny from their retirement money or their retirement income in 2008, 2020, or 2022. I can show you exactly how to do this and how to sleep well at night, knowing you will never have to worry about what is happening in the stock market. So if you lost money during the market crash of 2022 and you want to keep your money safe going forward, you need to read these two books. Our number again is 866-780-7233. When you call, I'll even show you how you can move your money from risk to safety and get upfront bonus money of up to 30% that will be added to your income account value on the very first day you say goodbye to risk and goodbye to fees. You can use this money to live on the rest of your life, and you can pass it on as a death benefit to your heirs. When it comes to your hard-earned money, remember what my good friend and CPA Ed Slott says. It's not what you make, it's what you keep that counts. We will show you how to keep 100% of your retirement money safe and how to make it last no matter how long you live. Our number again is 866-780-7233. And there's someone standing by right now to take your call.
Well, I have to take a short break. This is Brad Pistole, and you're listening to Safe Money Radio. We'll be right back after these messages.
Have you recently changed jobs and now you have a 401k or other retirement account you don't want to risk in the market? You've worked too hard to leave your retirement to chance. Since you'll probably start another retirement account at your new job, why not make sure nothing happens to your last one? We can help you roll over the retirement account from your previous employer and give you guarantees of growth without any market risk. Call now and ask about a bonus of up to 10% on your retirement money just for opening an account. Put your money on an elevator that only goes up. Our phone number is 1-866-780-SAFE. That's 866-780-7233. You can get your free Safe Money Information Kit by calling us now. That number again is 866-780-SAFE. 866-780-7233. Now back to more Safe Money Radio with your host, Brad Pistole.
We've been talking about safe money programs and how you can earn market-like returns without any of the market risks, how you can eliminate the fees that you're now being charged by your broker, and how you can start feeling secure, knowing that your retirement money is safe and growing.
Now, friends, on today's show, we've been doing a quick recap of what happened to the markets in 2022. Now, for most people, it was a pretty painful year. Just listen to these numbers. In 2022, the Dow, the S&P 500, and the NASDAQ had their worst annual performance since the financial meltdown of 2008. The Dow finished the year down 8.8%. The S&P 500 finished the year down 19.4%, and the NASDAQ finished the year with a whopping 33.1% loss. In fact, it was the seventh worst loss for the S&P 500 in the history of the stock market. And this is nowhere near the end of the story. The financial mess of 2022 didn't just affect the United States, it affected the worldwide economy. In 2022, Europe had its worst year since 2018. The European index, known as the Euro Stoxx 600, finished the year down minus 12.9%. And stocks in China and Japan snapped their 3-year win streak in 2022. And for all of you who kept calling me about cryptocurrency and Bitcoin and what do I think about it, well, if you were hoping that would save your bacon, think again. Bitcoin hit an all-time high in 2021 with a value of just over $68,789, but it finished 2022 with an epic crash, down 64% from the all-time high just 1 year before. Finally, how about the average stockbroker's safety vehicle? Those good old tried and true bonds. Aren't bonds supposed to have an inverse relationship with stocks? Don't bonds always go up when the markets tank? Well, you better think again. While stocks had a miserable year in 2022, bonds fared even worse. You see, inflation, massive interest rate hikes, and a super strong dollar left bonds in a completely vulnerable position, and they were exposed and hung out to dry. The return on the S&P U.S. Treasury Bond Index was minus 10.7% in 2022. The 30-year U.S. Treasury bond at its low sunk to its worst return in a century at minus 35%. And corporate bonds had a miserable 2022 also. The return on bonds issued by the S&P 500 companies was minus 14.2% in 2022. It seems like no matter where you turned, you lost money, unless you knew about safe money accounts. Friends, if you experienced some of the losses I just mentioned in 2022 and you're worried about whether or not your retirement plan will survive a year like this, then keep listening. You see, this does not have to be your story. There are millions and millions of Americans who have listened to these shows and they've read books like what I've written, Safe Money Matters and Bulletproof, the Safe and Secure Retirement Income Plan, and they have protected billions, hundreds of billions of dollars in accounts like this. They've decided to take risk off the table when it comes to their retirement accounts. My good friend and world-renowned economist Tom Hegna talks about why your level of risk needs to be reduced when you are near retirement. It's because of something called the sequence of returns risk. Now, just listen to what Tom has to say about a year like 2022 and how it can affect your retirement if you are invested in a volatile market.
Well, I see a lot of people over age 50 that have way too much money in the stock market. I mean, I've got even neighbors here in my community that have, I play golf with them, and they got all this money in the stock market. I'm saying, guys, you can't have that much money in the stock market. How many annuities do you have? I don't believe in annuities. Well, you're gonna have big problems in retirement if this market goes down 40 or 50% and stays down. It wasn't that long we had the lost decade here, right? From 2000 to 2010, the market did nothing, okay? And if that's your retirement and it goes down 40% and does nothing for 10 years, you're not going to be very happy about it, okay? And so you want to make sure that you got some guaranteed lifetime income coming in so that you have the time to let the market come back. See, what people don't understand about, the market and the sequence of returns risk is when the market goes down, if you take money out of a down market, you have to take out more and more and more the more the market falls. And then when the market goes back up, none of that grows back because you took it out and spent it. And the more money you're taking when the market is down, the less it can ever grow back. And they don't understand that all it takes is a couple of market dips early in retirement and your portfolio can enter a death spiral it will never come out of. So if somebody is so against annuities that I'm not going to use annuities, I'm market, well, then you better have a buffer plan. And the buffer plan is this. You can take money out of your portfolio as long as the market is flat or up. But any year that the market is down, you cannot take money out of that portfolio. You got to take it out of something else. Now, what could be a buffer? A money market fund could be a buffer. A CD could be a buffer. A cash value life insurance policy could be a buffer. An annuity could be a buffer. A reverse mortgage could be a buffer. You want to take it out of something that is not going down in value, all right? And so I just think too many people get confused. They think, oh, well, the market's done good for me while I've been saving and investing for retirement. Yeah, that's what it's there for. All right. But you can't, look at Morningstar. Morningstar says that the safe withdrawal rate from a diversified portfolio is now 3.3%. And by the way, that's up. It used to be 2.8%. See, a lot of people read this thing about the 4% rule, that when you retire, you can take out 4% per year. Yeah, that was great when interest rates were 10%. Interest rates are 1%, all right? You really can't take out, 4% anymore. It's going to fail because markets go up and they go down. And when they go down, you can't take money out. So people just don't understand it. They say, well, hey, the market's averaged 12% a year since 1924, so I can probably take out 10 or 12%. No, you can't. That's the fastest way to go dead broke, okay? And so people don't understand this, and that's, again, why I think they need to work with a financial professional.
Friends, there you have it from my good friend Tom Hegna, the best-selling author of Don't Worry, Retire Happy, 7 Steps to Retirement Security. Perhaps you've seen his show on PBS about this very book. If you're listening today and you want to learn how to protect your retirement from market crashes like 01, 08, 2020, and 2022, just call us anytime at 866-780-SAFE. That's 866-780-7233. I'll give you a copy of Tom Hegna's best-selling book, Don't Worry, Retire Happy, absolutely free. Just request a free financial consultation with me. When we meet, I'll give you a free review of your current plan, and I'll tell you whether or not you are positioned to withstand market crashes like 2022. Remember, I am a certified financial fiduciary and a retirement income certified professional through the American College. I wrote my best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan, with the very purpose of teaching you how to avoid financial disasters like what just happened in 2022. My clients didn't lose one single penny of their retirement money or retirement income in 08, 2020, or 2022. It didn't affect their lifestyle one bit. I can show you exactly how to do this and how to sleep well at night knowing you never have to worry about what is happening in the stock market. Friends, if you lost money during the market crash of 2022 and you want to keep your money safe, you need to read these 2 books. Our number again is 866-780-7233. When it comes to your hard-earned money, remember what my good friend and CPA Ed Slott says. It's not what you make, it's what you keep that counts. We will show you how to keep 100% of your retirement money safe and how to make it last no matter how long you live. Our number again is 866-780-7233, and there's someone standing by right now to take your call. And always tune in to our show each week or look us up wherever you listen to your favorite podcast, Spotify, YouTube, or Apple Podcast. That's Safe Money Radio with Brad Pistole. 866-780-7233. Since I have to take a break, now would be a great time to give me a call and request your free Safe Money Kit and my #1 best-selling book, Safe Money Matters. My number is 866-780-SAFE. That's 866-780-7233. Isn't it time to stop exposing your retirement to market risk? You're listening to Safe Money Radio with Brad Pistole.
How low can interest rates go? CDs, money market accounts, and checking or savings accounts seem to be the way banks give us the short end of the stick these days. If you have your money in a bank, you might even be losing money because of inflation. Don't let low interest rates get you down. How would you like tax-deferred growth of up to 3% on a short-term account? Have you ever heard of triple compounding? You can get interest on interest, interest on principal, and interest on taxes you would normally have to pay if your money was in a bank account. Don't let the bank give you 1% while taking your money to issue credit cards with 18% interest rates. Call now for rates of up to 3% or more, tax deferred, on your short-term safe money. Call 1-866-780-SAFE. That's 866-780-7233. Now back to more Safe Money Radio with your host, Brad Pistole.
Welcome back. I'm Brad Pistole, your host of Safe Money Radio and a Safe Money retirement specialist, working with clients right here in Springfield, Ozark, and Branson, Missouri.
Unless you've been living under a rock, you're probably suffering from what I call retirement whiplash. Now, what is that exactly? Well, you see, it's simple. Inflation is at an all-time high. Have you filled up a 5-gallon can of diesel fuel for your mower or tractor yet? Try filling up a 25-gallon tank for your truck. Have you paid attention to your bill at the grocery store? Have you tried to buy a used vehicle? How about a home or a piece of land? When you see your bill from these things, you will get whiplash. And what about the volatility of the stock market? Of course, everyone remembers how volatile the markets were in 2001 and in 2008 and at the beginning of the pandemic in 2020. And then came 2022. Have you ever seen the stock market go up and down with more violent swings at any other time in your life? And the volatility has absolutely no rhyme or reason. I will never forget May the 4th, 2022. Many of you know the phrase, "May the 4th be with you." In the weeks prior to May the 4th, 2022, the stock market dropped over 2,000 points in just a matter of a few days. The Dow dropped almost 1,000 points in late April. Then it dropped 810 points just a few days after that. And then it dropped 932 points again a few days after that. And then May the 4th happened. In the earlier part of the day, the markets were in the red, and the Fed announced the largest interest rate hike in over 22 years. And what happened next? Well, it was certainly not what anyone expected. The markets took off in the opposite direction of what any right-minded American would expect, and the Dow closed positive 932 points in just a matter of a few hours. This was one of the largest one-day gains since May of 2020. But do you know what follows May the 4th? That's right, May the 5th. And when the market ended up plus 932 points on May the 4th, I told my son Hunter, you just watch. It'll drop over 1,000 points tomorrow. And guess what happened? On May the 5th, Cinco de Mayo 2022, the Dow Jones dropped 1,063 points, which represented a 3.12% loss to the Dow and a 5% loss to the NASDAQ in one day. These massive swings in the market cause retirement whiplash. Just sit and watch the market from day to day, even hour to hour. Your head will go up and down so fast you won't even remember your own name. Friends, does volatility like this remind you of what happened at another time in history? Here's a hint, like 2007, just before the crash of 2008. I host Safe Money Radio on multiple stations 5 times a week, and I talk to thousands of local retirees in Missouri, Arkansas, Oklahoma, and Kansas because of this. And I can assure you of this, retirees don't like volatility. How in the world can you plan for your retirement income when the market has violent swings of minus 980 points, minus 810 points, minus 930 points, plus 932 points, and minus 1,063 points in just a matter of 2 weeks? It is absolutely impossible to develop a safe and secure income plan with swings that large. And here's the thing, it's stressful. And that's exactly why I teach retirees how to avoid swings like this in their portfolios. If you're listening right now and you're sick and tired of watching the stock market go up and down like a yo-yo, then you're listening to the right financial planning show. We are the #1 show on radio in the Ozarks, and we've been teaching local retirees how to protect 100% of their retirement savings from the volatility of the stock market ever since the financial crisis of 2008. Not one single client of ours has ever lost one single penny from their retirement accounts. If you think risk has to be part of your retirement plan, think again. Most people have risk in their portfolio because they simply didn't know there was a way to protect their money while watching it grow safely with no fees. We can show you exactly how to do this. If you want to protect your retirement money from the ups and downs of the stock market, just call us at 866-780-SAFE. That's 866-780-7233. Ask for a copy of my #1 best-selling book on Amazon, Bulletproof, The Safe and Secure Retirement Income Plan. This book will teach you what your broker hopes you never learn, because once you learn it, you will stop giving him 1 to 3% of your retirement money every year. You see, most people have absolutely no idea how much money they are paying their advisor in annual fees, and they fail to realize this. If you pay an annual fee of 1% and you're retired for 30 years, that's 30% of your retirement money gone to fees. Just imagine how bad this compounds if your accounts are losing 10 to 20% due to market fluctuation, and you're paying fees to the person who is losing your money. Friends, this is a recipe for financial disaster. Call us today at 866-780-7233, and you will never pay a fee again. I will give you a copy of my best-selling book, Bulletproof, absolutely free. And I'll send you a copy of my Safe Money Kit that shows you how you can get up to a 25% bonus of free money on the first day you move your accounts from risk to safety. And your account will be 100% protected from stock market volatility. That's a 25% bonus that you can use for lifetime income in retirement, and you can pass it on to your heirs. Our number again is 866-780-SAFE. That's 866-780-7233.
Well, I have to take a short break. This is Brad Pistole, and you're listening to Safe Money Radio. Let's pause for some exciting announcements.
Have you recently changed jobs and now you have a 401k or other retirement account you don't want to risk in the market? You've worked too hard to leave your retirement to chance. Since you'll probably start another retirement account at your new job, why not make sure nothing happens to your last one? We can help you roll over the retirement account from your previous employer and give you guarantees of growth without any market risk. Call now and ask about a bonus of up to 10% on your retirement money just for opening an account. Put your money on an elevator that only goes up. Our phone number is 1-866-780-SAFE. That's 866-780-7233. You can get your free Safe Money Information Kit by calling us now. That number again is 866-780-SAFE. 866-780-7233. You're listening to Safe Money Radio with your host, Brad Pistole.
Welcome back to Safe Money Radio. I'm Brad Pistole, a Safe Money retirement specialist.
Now, earlier in the show, we were talking about inflation and the volatility of the stock market in a post-2022 world. Inflation increased faster in 2022 than at any other time in our nation's history, and to the highest level in 40 years. So let me ask you this. Did your income increase at the same level as inflation? Did your boss call you in and give you a 10% raise to keep up with the inflation? Did your pension increase 10% to keep up with inflation? Did your Social Security check increase at 10% to keep up with inflation? Probably not. And you know what that means. When you walk up to the register in the grocery store and the bill doubles, it hurts. When you pull up to the pump with your same paycheck and the bill for the tank of gas triples, it hurts. When you pull into the lot to trade vehicles and the price has increased by 35%, it hurts. When the interest rate for your home loan goes from 2.75% to 6% and your mortgage payment increases by $400 a month, it hurts. And this is the reality retirees and pre-retirees are now facing. And in the midst of all this inflation, increased pricing, and rising interest rates, the stock market has been in the toilet. Do you want to hear the recipe for financial disaster? It's called increasing costs and inflation with decreasing values in your retirement accounts. Friends, I've been hosting Safe Money Radio right here in the Ozarks every single week since 2010, and my message has never changed. The most important ingredients in any financial plan include safety and guaranteed lifetime increasing income. And there is a bulletproof way to secure these things no matter what's going on in the stock market. The greatest financial minds in this great nation all agree on the following. In the 5 years before your retirement and in the 5 years after your retirement, you simply cannot afford losses in your portfolio. In other words, you have to remove the risks from your portfolio during this 10-year time period. Now, why is that? It's because of something called the sequence of return risk. And I've written a lot of national articles about this over the years. Now, we don't have time to go into deep detail about this in today's show, but here's the bottom line. When you start withdrawing money from your retirement accounts, you simply cannot afford losses on top of your distributions, on top of the fees you're paying your advisor. If you start taking distributions while experiencing losses, while paying someone a fee, even when they lose your money, you will end up in a financial mess and your retirement plan will fail. When it comes to developing a safe and secure retirement income plan, there are two questions every retiree must ask themselves. And here they are. How much guaranteed lifetime income do I have? And have I taken the retirement risks off the table? You see, nothing else matters. Those two things will determine whether or not you will live the retirement of your dreams. And we're going to talk more about this in our next segment, so stay with us. And don't forget, if you're listening right now and you're sick and tired of watching the stock market go up and down like a yo-yo, then you're listening to the right financial planning show. We are the #1 show on radio in the Ozarks, and we have been teaching local retirees how to protect 100% of their retirement savings from the volatility of the stock market since the financial crisis of 2008. Not one single client of ours has ever lost one single penny from their retirement accounts. If you think risk has to be part of your retirement plan, think again. Most people have risk in their portfolio because they simply didn't know there was a way to protect their money while watching it grow safely with no fees. We can show you exactly how to do this. We have done it for thousands of local retirees. If you want to protect your retirement money from the ups and downs of the stock market, just call us at 866-780-SAFE. That's 866-780-7233. Ask for a copy of my #1 best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan. This book will teach you what your broker hopes you never learn, because once you learn it, you will stop giving them 1 to 3% of your retirement money every year. You see, most people have absolutely no idea how much money they are paying their advisor in annual fees. And they fail to realize this. If you pay an annual fee of 1% and you're retired for 30 years, that's 30% of your money gone to fees. Just imagine how bad this compounds if your accounts are losing 10 to 20% due to market fluctuation and you're still paying fees to the person who's losing your money. Friends, this is a recipe for financial disaster. Call us today at 780-7233, and I'll show you how to never pay a fee again. I'll give you a copy of my best-selling book, Bulletproof, absolutely free. And I'll send you a copy of my Safe Money Kit that will show you how you can get up to a 25% bonus of free money on the first day you move your accounts from risk to safety. And your account will be 100% protected from stock market volatility. That's a 25% bonus that you can use for your lifetime income in retirement, and you can pass it on to your heirs. Our number again is 866-780-SAFE. That's 866-780-7233.
Well, I have to take a short break. This is Brad Pistole, and you're listening to Safe Money Radio. We'll be right back after these messages.
Do you own an annuity? Do you understand what it does, how it works, and if it's right for your retirement plan? Some annuities have massive fees with very few benefits, and some annuities are exposed to significant market risk. Worse yet, annuities may even be sold without any respect to your retirement needs. If you own an annuity, it's probably a good idea to find out more about how it works and if it's right for you. It's time to give Brad Pistole a call now at 866-780-SAFE. That's 866-780-7233. Brad will help you review the features and benefits of any annuities you currently own without any obligation. Once again, call Brad Pistole now at 866-780-SAFE. That's 866-780-7233. Now back to more Safe Money Radio with your host, Brad Pistole.
We've been talking about safe money programs and how you can earn market-like returns without any of the market risks, how you can eliminate the fees that you're now being charged by your broker, and how you can start feeling secure, knowing that your retirement money is safe and growing.
If you've been listening to Safe Money Radio for any amount of time, you've probably heard me talk about my farms. I purchased my first farm back in 2014, and since that time, I have owned 5 different farms. When it's purchased the right way, land can be an incredible part of a retirement plan. Now, I still own farms in Missouri, Kansas, and Iowa, and they all have different blessings and benefits and features that will benefit my retirement income plan for the rest of my life. You see, virtually everything I do is focused on my future retirement income plan. Here's an example. In 2021, I purchased an incredible farm in southern Iowa. It's one of the most beautiful pieces of ground I've ever set foot on, and this is a famous piece of ground to outdoorsmen. This farm used to be owned by the one and only Mark Drury. And if you have watched any of the Drury outdoor shows, you've probably seen footage of this farm. Mark is a great guy, and I've truly enjoyed getting to know him and become great friends with him. But aside from this land is special because of the CRP contracts I have on the farm. This is income-producing land. Not only do I get to enjoy hunting and fishing on it, but it also provides a substantial annual income. And do you know what the most important thing is when it comes to retirement? Guaranteed lifetime income. And it's even better when it's increasing guaranteed lifetime income. And there are very few things in this world that can guarantee you lifetime increasing income. With all that being said, when the spring of 2022 rolled around, I learned a very valuable lesson regarding the impact inflation has on a retirement plan. You see, I own 2 different tractors. My Missouri and Kansas farms are only 2 miles apart, so I keep one tractor in Missouri. And then I keep one in Iowa. And when the grass started growing in the spring of 2022, I spent one weekend driving to the local gas station to fill up all of my 5-gallon diesel cans for my tractors. Now, when was the last time you priced diesel fuel? In May of 2022, a gallon of diesel fuel was $5.20 a gallon. Or in other words, it cost me $26 to fill up one 5-gallon can. And the problem is, I have 5 5-gallon cans at each farm. So it cost me $260 to fill up my gas cans just to start the mowing season. And as we talked about earlier in the show, gas isn't the only thing that's gone up. Have you paid attention to your bill at the grocery store? Have you tried to buy a new or used vehicle? How about a home or a piece of land? When you see your bill from any of these things, you will get whiplash. Your dollars won't buy what they did a year ago, or even 6 months ago, or even 1 month ago. We are experiencing record inflation, and I can assure you of this will impact your future retirement income plan. When you think about your 401k, IRA, or retirement savings, do you think about the impact inflation will have on your future income? Do you have a plan for this? If you don't, you will not like the reality that you will face when that day comes. When it comes to developing a safe and secure retirement income plan, world-renowned economist Tom Hegna says there are 2 questions every single retiree must ask themselves. How much guaranteed lifetime income do I have? And have I taken the key retirement risks off the table? In other words, what type of accounts have you put your money into? Are they variable accounts like stocks, bonds, and mutual funds? Do your accounts go up and down with the markets? And do they offer any type of contractual guaranteed lifetime income? Or do you have to rely on self-managing the balances in your accounts in order to keep from running out of money during your retirement years? And what about the primary retirement risks? Do you have a plan for things like stock market risk, income risk, inflation risk, and healthcare risks? What happens if the stock market takes 3 or 4 major crashes during your retirement years? Guess what? The average stock market crash happens every 5 to 6 years, and it lasts for an average of 18 months. Would your current plan survive those crashes while you're taking distributions from them? And what about the risk of inflation? If you were invested in something that doesn't offer guaranteed lifetime income and inflation continues to go up 8 to 10% per year, are you going to run out of income in retirement? What if you have a major medical emergency? The average couple experiences $250,000 in medical expenses during their retirement years. Do you have a plan in place to deal with these expenses? If you want to protect your retirement money from the ups and downs of the stock market, call us at 866-780-SAFE. That's 866-780-7233.
Well, I'm about out of time. If you're serious about your financial future, give me a call and together we'll get your retirement savings on the fast track to above average growth and safety. One of your biggest returns will be peace of mind. Thanks for listening. Until next time and at the same time, I'm Brad Pistole, reminding you to stay safe so that you can step into a secure future.
You've been listening to Safe Money Radio with your host, Brad Pistole.
Save Money Radio, your money safe and sound.
Call now to find out how to guarantee the safety of your money. You've worked hard, and it's important to secure your financial future. Call Brad Pistole now for your free Safe Money Information Kit at 1-866-780-SAFE. That's 866-780-7233.
Save Money Radio, your money safe and sound.
The preceding information does not represent tax, legal, or investment advice. Surrender charges apply to base annuity contracts. Optional lifetime income benefit riders are used to calculate lifetime payments only and are not available for cash surrender or in a death benefit unless specified in the annuity contract. Fees may apply. Annuity guarantees are based on the financial strength and claims paying ability of the insurance company. No information presented today should be acted upon without meeting with a qualified and licensed professional. Obviously, by calling us now, you're just taking the first step towards protecting your retirement. It is important that you read all insurance contract disclosures carefully before making a purchase decision. Rates and returns mentioned on this program may vary based on state availability and are subject to change without notice.